Frederic Neumann, co-head of Asian economics research at HSBC, joins me now from Hong Kong to discuss this. So both numbers ahead of expectations, both growth and inflation. So the PBOC's job isn't done, Fred. What's their next move?
Well, the next move is to keep doing what they did over the last 6 months, which is more interest rate hikes, more RRR hikes coming through. We think they're more at the end of the tightening cycle than the beginning here. And I don't think there's a real risk of a massive overheating at this stage. But the numbers today clearly show that a bit more work needs to be done on the monetary tightening front.
When you say they're towards the end, when is that inflation number going to peak, and when is that tightening cycle going to come to an end?
Well, our assumption is that it will peak at the end of the second quarter. There's a slight risk factor here, and that is food. Food has really been the driver of inflation, of the headline reading, at least in China, and it all depends on harvest, for example. But broadly speaking, end of the second quarter, we should see a peak of inflation. And remember that China has a lot of agricultural inventories, a lot of grain in stock, and for example, so that with releasing those stocks, food prices should start to come down over the course of the second quarter, and then the second half of the year, the inflation numbers will look much prettier than they did today.
What about the timing of this rate hike? Some are saying we could get it today, a rate hike, or at least a hike in the reserve requirements. What are the odds that we could get something tonight?
I think Friday nights is always, something where we closely watch our Bloomberg screens and Blackberries, because that tends to be a time when the Chinese move. So we wouldn't rule it out entirely. Now, we just had, obviously, a tweak in the interest rate. Perhaps the next move might be there for an RRR hike rather than the interest rate. But we think both will happen in the very near future.
Now, when we talk about food prices, you have the CFO of the French supermarket company Carrefour warning that inflation could affect consumption in China. Is that something that you're concerned about? Could we actually see consumers pull back here?
Well, it is something we're watching very closely, but it's reassuring to see retail sales, for example, not slowing as much as had been feared in March. The data was released today as well. But we are seeing clearly a risk of a rerun of 2008. If we were to see a further spike in oil price, a further spike in food prices, not just in China but across Asia, that would have a meaningful impact on consumption. We have, for example, seen consumer confidence indices drop in the month of March in places like China, in places like Korea, and that was attributed in part to the inflation shock. And therefore, we do expect inflation to roll over, but if it doesn't, if it continues to track higher, consumption will be the first victim here.
Fred, quickly, what about these markets? We have seen Shanghai, the composite there, up about 9% so far this year. Investors are encouraged that China is going to achieve this soft landing. Is there further to run here? Is there more upside?
Well, we think, yes, the soft landing scenario remains intact. We don't see a reason to change our assumption with today's numbers. And therefore, looking ahead, I think the market is telling us that the economy will pull through this despite all the risks in the global economy.
Frederic Neumann of HSBC, thanks very much for being with us.